a very warm welcome to Insight. I am Aman Agarwal. Today we talk about the banking scenario in the country as for the first time in 10 years, the Reserve Bank of India is handing out licenses for new banks and over 24 companies are vying with each other for these licenses. Remember, earlier this year, the RBI had said it intended to issue new banking licenses as part of its effort to improve financial inclusion as millions of Indians do not have access to established banks. And to discuss the same, we have with us in our studios, as always, three distinguished guests. Please welcome Professor Aman Agarwal, a Vice Chairman and Professor with the Indian Institute of Finance. Welcome to Insight, Professor Agarwal. Sitting next to him is Bharat Kaushal, a Managing Director and CEO, Sumitomo Mitsui Banking Corporation. Welcome to Insight, Mr. Kaushal. And we are also joined by Shantanu Guhare, Senior Journalist, India Editor with Central European News. Welcome to Insight. Mr. Guhare, I'd like to begin with you. Sure. We understand many big firms are now in the fray, wanting to get new banking licenses. Some are new aspirants, some are there, like some have been wanting to open a bank for a long time, and they are wide-ranging hopefuls, right from our postal department to Birla, Anil Ambani, etc. But how do you look at the number of applications that we have received? We understand just 26 applications, somewhat lukewarm response?
No, not really exactly. 26 applications for a slot of 10. I would rather say that's fine. I mean, 10 guys, maybe 16 guys might go out and 10 move in. I should see the move from the way it has been conceived. In my opinion, this is the banking sector's biggest forward-looking decision in the last 2 decades, especially in a country where nearly 59% of people only have access to banking, dominated largely by public sector banks, and some small time or some private banks. What does it mean for the common man? What does it mean for the economy? It means more services, new banks, new aspirations, and a lot of new challenges for these banks. They have, in one shot, the government has pushed these areas, opened up this area, and asked these banks to move in because it feels, to some extent, the primacy of the PSU banks needs to be challenged. PSU banks over the years, over decades, have been immune from failure. They are owned by the government. But these private banks, when they come in, they bring in their own regulations. They give you much more facilities. They expect you to park more money as compared to a PSU bank. But they also have been told by the government that out of the 4 branches you open, one is mandatory, you have to go to the rural zone, right, which is again a very good thing. How fast they will implement, I do not know, but hopefully they should do it. Unlike in the aviation sector where people promise and then they didn't fly that sector, that kind of situation should not happen. Overall, I'm fairly happy with this decision, and I sincerely believe it will take about a year, not fast, because obviously a panel is going to evaluate that, vet that, check it, and finally a lot of lobbying will go behind the scenes, which is commonplace in Delhi, and eventually somebody will get the license. But I think it's absolutely a fantastic move for the banking sector, for the financial sector, and it will work very well. And it just has to be seen. People who are coming in must have fairly deep pockets. As you know, the mandatory regulation is about $84 million you have to have. You must not have more than 49% of foreign equity partners and stuff like that. So the government guidelines are fairly clear. So I sincerely hope it's a good move.
All right, and what it means for rural India, what it means for improving penetration there.
Nothing.
I'm going to come to that. We'll discuss it in greater detail. But Mr. Kaushal, how do you look at the response the RBI has received? Because earlier it was reported that just about everybody was wanting to get into banking. One had hoped for a mad scramble of sorts. Do you think the response is somewhat lukewarm, or do you not?
Well, there is a historicity to the trend when you see the trend analysis. After 1970s, the nationalization, there were only 2 efforts at attracting new aspirants for the banking sector, in 1994 and in 2003.
Right.
And on both occasions, people who had been in that sector had some muscle, as well as new type of aspirants both got chances. So there were the HDFC, ICICI type of financial institutions who got into mainstream banking. And the others were the Times Bank, the Global Trusts, and they finally found ways in which they got consolidated. In 2003 too, people with historical financial sector expertise like Kotak, and the other one was Yes, which was a new but banking sector rich experience, people, professionals coming and doing it. And you see the same kind of pattern, even though number may have fallen from 100 odd on both those occasions independently to only 26 now. But you don't want to sort of send a signal, as happens, say, sometimes in telecom sector or in other sectors, that get the license first and then make hay with it. So they want to sort of, you see that there are new aspirants, but largely the candidates we are talking about have been in this space for 20 or 25 years. There are very solid non-banking finance companies.
Right.
They are quite well regulated, but their access to money is depriving them of the opportunity to become real participants in financial inclusion. And therefore, they must be given that broader base of deposits and cheaper access to funds so that they can really grow. So there is a responsibility of financial inclusion on one side for better money to be augmented by the banking setup. There is also responsibility for a sound and stable banking setup. So the whole emphasis on fit and proper, discounting what the earlier media reports were, that brokerage firms may not come in, or real estate companies may not come in, or industrial houses may not come in, has been dispelled, because it's not singular to one particular domain, but it is saying that stability will be given a lot of emphasis. So it is, to that extent, people are conscious. There are a few new players, but that is always going to be the case. But I think it's common market knowledge that people with very solid background will be the ones who will qualify, whether the number is 6 or 8 or 10.
Okay, Professor Agarwal, how do you analyze the situation?
The thing which Reserve Bank intends to achieve by introducing new banks, which has been a demand for over almost a decade now, is give impetus to the banking structure and the market systems. Given the global recession, the flows have gone down. The banks are not keeping up with the stress test positions. The NPA positions are in bad state. However, the Indian banking system is still stable, unlike the banking system observed in the Europe or the US even today. So given that, they're wanting to give it some kind of impetus, so the banking system has some new funds coming in, some new players who bring in that impetus, that pace, to make it go through this rough pace, more like an engine, a new engine to the whole mechanism, to push it forward in a much faster way. The second thing they would like to achieve is to have a much wider reach, especially in the rural segment. Now, as far as the first component is concerned, they would be very well be able to achieve that with a huge amount of FDI flow coming in, because there will be partners who come in with the new banking system which is being proposed. Even the local players who are going to be there are going to be partners with foreign banks who bring in. Some of these foreign banks already have operations in this country, more into corporate lending system only, not into retail per se. So some of them may move into that segment with this new system which is coming in. The rest will be coming in from overseas, bringing in that FDI. The second part, which is very critical and important for the country's growth, and as what you mentioned of something called financial inclusion, is the banking in the rural segment. Almost about 85% of population, according to some of the Reserve Bank document itself, of the rural population is not serviced with banks. They are not provided banking services. They do not know even today what is a bank and how can they actually utilize that service, because of large number of restrictions, documentation restrictions, and the difficulty to get an access to a bank. You have to know someone to get an access to open an account, which is still a condition which has been there for almost 30-40 years, which from a banking perspective is okay, but from a rural guy's perspective, it is very difficult for him to go about getting that particular basic requirement fulfilled. Now, that particular thing, I feel, would not surface up, because these new banks which will come in, they have to see their own sustainability. And the initial phase, the rural segment is rich in cash, can give them long durability, can give them profound capital, but not year one or year two. So that's where they will move into major markets where they can encash good, rich, or NRI or HNI as they call clients, to bring in that capital for them. And that's where the second point which the RBI wants to introduce is the rural banking factor, to introduce more inclusion of people, would not to a mandate take place. The third thing, in my opinion, which will facilitate it through the system, would be the introduction of big retailers coming into this country. because most foreign banks have tie-up with these big retailers already in their own domestic markets, and they would be very warmly welcoming to finance their operations and set up their shops here in India, which has been given a go couple of months back. So that kind of a push may also be facilitated. So that growth for engine, the additional engine, the RBI should be able to introduce that momentum into the system. As far as stability is concerned, I feel being conservative, as the case of Canadian banks and Indian banks, has shown through the last 4 years of truffled waters that being conservative is one of the most easy short manners of being stable and secure. And I don't think RBI would want to go away with this kind of kavach or the kind of shield which they have of doing away with the new products. It's not introducing new products, it's just letting them go with a very slow pace. And I think that will still be there in the banking system.
I mean, if I may just add, with your permission, 60% of India is covered under the organized banking setup, and there's this whole emphasis. But from a policy standpoint, I mean, on one side, you want many sectors, because of risk parameters on existing banks, they can't even delve into those areas. They will keep growing as India is growing and meet the growth expectations as part of their growth. But there are gold loan companies, there are various other retail lending with almost zero NPA or less than sub 1 NPA. So in those cases, they need to be brought into the mainstream of banking setup. And be recognized, because they are huge deposit bases. They are huge basis of distribution platforms which can come in. Perhaps why there are only 26 is because if you go through the operative structure which is being created under the non-operative holding company, the company on its standalone basis has sometimes got lesser incentive in spite of cheaper access to funds to convert itself into this banking setup, because they lose more control, they must go through various stipulated thing which offsets the cheaper access to money. However, if we are able to sort of allow consolidation of more banks or more growth opportunities, that is where synergy will come to it.
That point. But before we slip into a break, a quick word from you, Professor Agarwal, on the numbers of applications. I'd like your reactions also, because two decades ago, when the RBI had first opened the doors to for new banks, there were 113 applications.
Correct. Two things. Firstly, I think the number is more than appropriate, given the market scenarios both in India and international markets. Banks overseas are dried off with funds. They do not have funds. They are looking at coming to newer markets. Even those banks which want to move into India with this new structure would want to raise this capital from within the sources here itself instead of bringing in more capital. They are going to bring in more know-how than capital per se. Second thing which is important is that the rules and regulations and the regulatory framework which has been created is tremendously different from what they were almost a decade, 15 years back than what it is today. And that what restricts the framework to allow anyone to move in. It is now very few who can qualify to actually come in. Who will fit in proper. And as my friend said here, clearly that they would not like to lose their hold on their own capital which they enjoy without an NPA position.
All right, with that, it's time for us to slip into a break in the program. Stay with us. We'll be right back.
आज मैं आपसे एक जरूरी बात कहने आया हूँ। इन तस्वीरों को देखिए।
मैं बार बार क्यों बीमार पड़ती हूँ? मुझको स्कूल में सब बुद्धू बुद्धू बोलते रहते हैं। मैं रल्ले में भागता हूँ ना तो थक जाता हूँ।
ये सब कुपोषण के लक्षण हो सकते हैं, लेकिन कुपोषण से बचा जा सकता है अगर हम 4 बातों का ध्यान रखें। 1. गर्भवती को खाना अच्छा मिलना चाहिए, सामान्य से 1/4 ज्यादा। 2. माँ का पहला गाढ़ा दूध अच्छा होता है, सच्चा होता है, उसे फेंके ना, उसे बच्चे को जरूर पिलाएं। 3. बच्चे के 6 महीने का होने तक उसे सिर्फ माँ का दूध पिलाएं और कुछ भी नहीं, पानी भी नहीं। और 4. बच्चा जब 6 महीने का हो जाए तो 7वें महीने से स्तनपान के साथ साथ उसके पोषण का पूरा ध्यान रखा जाए। तो ये 4 बातें भूलिएगा नहीं। 4 बातों से नाता जोड़ो, कहो कुपोषण भारत छोड़ो।
मुझे पैसों की बहुत जरूरत है। इस गोल्ड ज्वेलरी के कितने पैसे मिल जाएंगे?
बहन जी, ये तो सब पीतल है।
What? अब मैं क्या करूं? अब मैं अपने बेटे का एडमिशन कैसे कराऊंगी?
अगर आपने सोने की ज्वेलरी खरीदते समय उस पर हॉलमार्क के 5 निशान देखे होते तो आज यूं निराश न होना पड़ता।
हॉलमार्क का निशान शुद्धता क्या है?
माँ, हाँ? आप कुछ भूल रही हो। क्या भूल रही हो? आपने नल नहीं बंद किया। अरे ध्रुव।
क्या दीदी?
तुम कुछ भूल गए।
क्या दीदी?
तुमने जाने से पहले लाइट नहीं ऑफ की।
उतना ही इस्तेमाल करें जितने की आवश्यकता है। आने वाली पीढ़ी को उनकी सुविधाओं से वंचित न करें।
जागो ग्राहक जागो।
Welcome back to Insight. We are talking about the banking scenario in the country. Mr. Guhare, I'd like to continue with you. We've discussed how 40% of our adult population does not have access to established
Precisely.
banks. So this need to expand is obvious. But many would say that out of these 26 aspirants, just 3 or 4 are likely to get a banking license. Is that likely to change the existing scenario dramatically?
How much the government gives and how much they actually get is, of course, a matter that comes later.
Right.
What does an average Indian guy who spends money in the bank wants? He feels that the current public sector banks, they are in a peculiar situation where that they are banks which can never fail, and as a result people go for these low risk investment instruments. They're very happy doing it, and that's why they have a large chunk of savings. But probably somewhere the RBI also realizes the chunk that is left outside, evident when that Ponzi scheme affair came up in Bengal, Jharkhand and Orissa. They realized that there was a significant amount of money in the market which these companies were picking up and running away with it. If that money, even a portion of that would have gone to public sector banks, things would have been different. Public sector banks haven't gone there. They're only hoping that new players who come into the market hopefully will acquire smaller Indian banks which are ready to offload their stake, and then they will start expanding their business. Okay, let's assume hypothetically that in the first lot the banks don't go to the rural zone. I think if nobody will go to that, but still the foreign banks, still the private banks will have an advantage, the advantage of capital with them. Indian public sector banks this year itself has to raise something like 9,60,000 crores of capital, and the markets are not great enough. The government is not keen, the RBI is not keen to pump in more money. They have huge NPAs. The private sector bank will have a great advantage here.
Okay.
It all needs to be seen how much of time and space they will devote to the rural market.
Okay.
As Professor Agarwal said, in the first 2 years, nothing is going to change. They will operate exactly like the way a public sector bank or other private banks have operated. Maybe later, realizing the potential of that market and the growth, they will try and move in there. But I guess I cannot speculate how many will get in. I'm still hoping that won't be definitely 3, there will be more. They can't be 3, but I'm somewhat very confident that the money they will bring into the market with their foreign partners will be a great boost to the current situation in the market.
Okay.
PSU banks at this point of time are actually struggling to raise money from the markets, and there are no chances. I mean, the government is not going to put in that much of money. So I think we are in a fairly interesting area. It will take 4-5 months before the government finalizes it, and about a year before the licenses are actually given out and operation starts.
March 2014.
Yeah, March. Yeah. So let's see. I still believe the rural zone is something which will take some time, but I think that it won't be more 3. It definitely will be more than that. Licenses will be given to companies who are fairly optimistic in such operations.
Okay, Mr. Kaushal, if you could take us through, our experience with private banking. What's it been like? Because we've had success stories, but we've had failures as well.
Yes, in the new generation, there were 2 sets of private sector banks, the old ones and the new ones. The older ones who missed by their size in 1970s remained on a standalone basis, and all of them largely are compliant with the banking norm. The only thing is that they're into the sort of saving bank mind. They have very good base, they're growing, their NPAs are under control, their net interest margin are only 3 or something rather than 5, which is the case of modern banks in at some places. So there's no huge growth story, therefore the stocks are not traded, therefore the capitalization is low, they are attractive, and therefore they may be part of the growth and consolidation story. The newer ones are a little different. The newer ones have a lot of value-added service, 30–40% of fee income, and because of that fee income, they sort of add more value, product bouquets, investment banking, and cross-selling of products, and so on. So they're smarter, and therefore they have modeled themselves on the more foreign bank style situation, but underpriced, maybe pricing-wise, they are smarter in being more efficient, more Indian price, and therefore they have captured a good market. But as all of us here are maybe hinting, there is a huge market which is lying there. And that's what you want to capture. And from a Reserve Bank's conservative standpoint, it's a dichotomous approach. On one side, you need larger entities. And the larger entities must always be able to finance the long-term requirements of infrastructure, which in a country where interest rates are higher, 87% of the deposits are less than 5 years. Therefore, Indian banks are impaired, are sort of constricted in their approach on how they can do this. The other side is a conservative approach, but as the Reserve Bank governor recently hinted, it's going to be a system of moving towards a regime of continuous licensing. So you'll open a benchmark and a standard, and maybe starting with lesser number and going to a higher number, or giving a good signal that we have 6 or 8 or more people at one go. It can be either of the two approaches, but the idea is they're not going to decline just on the eligibility criteria, but maybe look at the business plan, look at those things. They are fairly cognizant that while the whole country may be crying about rural area, I mean the whole banking community, there is merit. You just need to be more organized, and there is a situation where on one side you have to adhere to Basel II, Basel III type of very high risk thing, and rural household incomes can never be having cash flows the way you like as a bank, and so you are hesitant. And how do you merge these 2 or 3 different kind of things?
Absolutely.
And the efficiency is brought in by distribution platforms from outside. So it's the story which will tell, but the story on a standalone basis sometimes is less incentivized, because a 10 rupee stock of a non-banking finance company who's an applicant in yesterday's deadline or day before yesterday's is trading at 800 or 1000, right? And he has a majority stake. Why will he give up to 49% and come down to 10%? Unless, in addition to all the other things of cheaper access, he's allowed to consolidate and bring someone more into mainstream. So it's the story which will help him. And that's what they're going to do from now. Maybe some of them have done it, but from now on till March. In all their discussions.
Professor Agarwal, the potential is clearly huge. We understand millions do not have a bank account, but what about this whole aim of financial inclusion? Are these banks or these new banks that are going to get licenses, they are going to comply by this rule of opening 25% of their branches in rural areas?
You see, this cry has remained there for the last 50 years, where people have been demanding services, efficiency, functionality of banks and financial institutions, not only in India but even in the rest of the world also. And there is always a lack which is always there, which is never fulfilled. Now that is one component. The political economics of this particular system is, as it is rightly timed, which is that there are elections around the corner. So who can play their cards well, get their cards through. So it's a basic deal process which is going through in the next couple of months, which will bring forth how many banks, new banks, come into picture and how many do not. So who play their card well will get it through. The second very political economic scenario which is there worldwide is that there are a large number of European and American banks which have been functioning and have been a creation of the new technologic framework which have erupted in the US and Europe as well, which includes online banks and small set of banks as well. Now they might be up for sale given the economic conditions in these 2 economic zones. And that becomes an edge-on take-up when it comes to moving in up and making your presence global. Most of the organizations or companies which are wanting to moot up and create a bank already have a good global presence. However, they are not listed in some of these exchanges worldwide. By taking up some of these banks which are already listed there and are not in good shape, which you get at dirt cheap, like Lehman Brothers was sold to Barclays and others at a very dirt cheap rate, including the real estate prices which are dirtly cheaply bought by them. Now you automatically get that access, and that makes your global presence more strong. So it can also be a good strategy for some of the large corporations which have been in existence in India, wanting to enter into foreign markets but not being able to enter with the Indian name, to move in by getting some of these smaller institutions under their ambit. And I think that is another political economic scenario which needs to be looked upon. Servicing is an outfall. The more important factor here is that they must be efficient. And secondly, which RBI must try and attain, is that they must ensure that stress tests are done and they are reported publicly. I remember in Chile when the IMF and the World Bank were mooting in the 70s and early 80s, that you must allow foreign participants to come up and bring in liberalization that does risk transfer. Chile opened up its banking sector. 98% were completely outgone. There was no commercial bank owned by the Chilean government. Everything was outgone. And when they had recession, they had problems. All these banks clubbed together and said, for us, you are a very small portfolio in the total banking framework which we have worldwide. So even if we close our shops, we have no problems there in Chile. But for you, it is a full banking system. Right. And as a result, the Chilean government had to bail them out. So the risk transfer did not actually take place. And as a result, after that, the Chilean government did bail them out, but then created a norm that all these major, that time the stress test functions were not there. The Cramel techniques and other techniques were not there in picture. They were only theoretical models at that time. They made it mandatory that they must report their asset positions, asset liability positions on a daily basis in the national dailies. And as a result, the same system which was very weak, subject to foreign investors taking to their toes, was completely stable within a span of 1 year. And I think the Reserve Bank and the Federal Reserve Bank has done it 2 years back. They did not disclose it publicly, but then they made it very restrictive. And I think that's where the Reserve Bank also needs to come out and say, do your stress test, and if not on a monthly basis, at least on a quarterly basis, it must be dedicated to the markets at large, so that once it comes in public view, then the banks automatically bring in stability and make the system efficient. There are even private banks in the country, localized private banks, pseudo banks, which are actually huge NPAs because people have taken loans for housing and all, and for almost a decade, 2 decades, they have not paid back their loans, and they are not fearing that something will happen to them. Most of these people are sitting in foreign soil, having taken loans for assets in this country, and they don't fear because they cannot be caught easily. And these banks are generating these NPAs for one reason or the other. So and I think that kind of efficiency needs to be brought in, and the Reserve Bank needs to focus on that.
Buhara, you wanted to
just one quick point. I mean, basically, you know, all these banks, the private banks which are coming in, new licenses, they have to try and tap a market of the NBFCs.
Right.
In a country where not all NBFCs are allowed to pick up money, these 8 guys need to go in there. Earlier, if you look at the 20th Century Finance, Kotak Mahindra, those people who were eventually turned into banks, and Centurion got eventually merged with HDFC. Somewhere, that is a market that all these private players will eventually target, because despite the government norms, as you know, a lot of NBFCs flout rules and they pick up significant chunk of money from the market.
Right.
So it once again brings me to my argument that the money is there, it needs to be channelized. And I can guarantee you the private players may not open up that much in the rural market in the first two years, but it will eventually try and go there. That is the market. That is the market where they have to grow if growth has to happen.
Okay.
As simple as that.
All right. You want to come in here?
Yeah,
very briefly, we have to take a break.
No, I just want to say, first of all, priority sector lending was the different gradation of the economy and going to tier 2, tier 3, tier 4. All banks in India meet 40% requirement. All of them have the same amount of NP and priority sector usually that they have in the remainder of the portfolio.
Okay.
And they make almost the same amount of net interest margin on this money as the other part of the portfolio does. So whether we do geographical spread of rural versus this, there are ways, and geography is met sometimes by technology more efficiently.
Right.
So, you know, you really just put to sales agents type of relationship managers in those branches.
So we have to shift our focus from branch banking to, of course, technology.
To the smartphone and
absolutely.
so on.
I'm going to discuss that point in greater detail when we come back from this quick break. Stay with us.
4 बातों से नाता जोड़ो, कहो कुपोषण भारत छोड़ो। 1. गर्भवती को खाना अच्छा। 2. पहला गाढ़ा दूध है सच्चा। 3. 6 महीने सिर्फ स्तनपान। 4. फिर स्तनपान और पोषण का ध्यान।
जी हाँ, अपने बच्चों को कुपोषण से बचाना है तो ये 4 बातें जरूर याद रखें। 1. गर्भवती को खाना अच्छा। 2. पहला गाढ़ा दूध है सच्चा। 3. 6 महीने सिर्फ स्तनपान। और 4. फिर स्तनपान और पोषण का ध्यान। तो 4 बातों से नाता जोड़ो, कहो कुपोषण भारत छोड़ो।
श्यामू देखो फिर आ रहा है, नया टीवी मांगेगा। मैं निकलता हूँ, तू टाल दियो।
जरा रुकिए।
हाँ बोलिए।
ये देखिए कंज्यूमर कोर्ट का फैसला।
ये कागज किसी और को दिखाना, इससे कुछ नहीं होगा।
अब जरूर होगा। अदालत का आदेश ना मानने पर तुम्हारे खिलाफ वारंट जारी हो सकता है।
तो क्या?
तो तुम्हें 3 वर्ष तक का कारावास या 10,000 रूपए तक का जुर्माना या दोनों हो सकते हैं। समझे?
समझ गया।
जागो ग्राहक जागो।
कल मैं बड़ी मुश्किल में पड़ी जब प्रिया ने मुझे अपनी प्रॉब्लम बताई।
कल मैं अपनी गर्भ निरोधक गोली खाना भूल गई। मुन्नी अभी बहुत छोटी है, कोई रास्ता हो तो बताओ ना।
इस मुश्किल से निकलने का एक ही रास्ता है, इमरजेंसी कॉन्ट्रासेप्टिव पिल यानी ECP। अगर प्रिया की तरह आपसे भी ये भूल हो जाए तो 72 घंटे के अंदर ये गोली खा लें और बिल्कुल निश्चिंत हो जाए। लेकिन प्लीज याद रखिए कि ये नियमित गर्भ निरोधक उपाय नहीं है और बार बार लेने से हानिकारक हो सकती है।
अधिक जानकारी के लिए पास के सरकारी स्वास्थ्य केंद्र में संपर्क करें।
Welcome back to Insight. We are talking about the banking scenario in the country with the RBI ready to give out new banking licenses. Mr. Kaushal, if you could, take further the point you raised earlier in the program, how is it that our banking sector can deliver solutions for the rural areas? Because that's been a big challenge so far.
Correct. I mean, I think there are 2 points. There is distribution, which is the requirement. Distribution can ride on technology very efficiently, and with mobile networks and so on. All you need still for confidence are the faces of people and a branch and a physical infrastructure to hold on for the sake of confidence and for sake of trust. The second important thing is that there about 35% of the economy, even in the banking sector, you notice, is in saving. So there is a huge amount of that corpus lying, tangible corpus, by all conservative data estimates, which needs to be tapped and which needs to be made a participant into the national growth scheme. So somewhere organized financial sector activity needs to reach out to them. I mean, Aadhaar card is a case in point where in the Aadhaar card there is a revenue inflow of 100 rupees for 100 days into a rural household, therefore streamlining the cash flow into the rural household and assimilating that into the definition of middle class which banks like to see. And therefore sitting in Delhi, if I am actually taking the risk of the government of India giving the 100 rupee every day into my account on behalf of the final borrower of this bank, then my credit worthiness on 10,000 rupees is 50,000 rupees. Therefore, I can help easily a two-wheeler being bought and finance the two-wheeler because I'm actually getting the money from the government.
Right.
So you're channelizing money by propelling demand, but also creating the ability of bringing more economy into the mainstream definition.
Right. Professor Agarwal, that can be a good alternative of, other than expansion, to improve financial inclusion, making use of the existing technologies that we have.
I would like to bring in 2 case studies, which actually I was on the banking award committee a couple of years back also, and interesting cases which came up. One in case is the case of Japan itself, where they tried to sell insurance almost about a decade and a half back, and they were unable to do through the insurance companies. So then they introduced the insurance policy through the postal system. We already have a postal network which goes to the rural segment, to farthest rural areas in this country. They should be allowed and they should be motivated to induce more banking activities instead of just keeping a little bit of amount of money and almost catering basically to the postal services, not banking activities. That is one segment which, without spending a penny, the government can raise almost double the amount of what they are able to raise from the metro sector banks system itself. Double the amount without spending a penny.
Right.
The second activity which I came across, a very innovative technique where this bank became profitable year one, which is very rare, was in Cambodia, a private enterprise started, because in Cambodia the roads are not good. There is a lot of theft which takes place, so they could not open up branches in different areas. So they called it something called a mobile banking, where they bought Mercedes Benz, in which they had mobile banks, one officer, one security, and they had technological systems of securing it. And this bank will move from one town to the other and then collect money and give money on an hourly basis. They will spend about an hour or 2 hours every day in different villages, and without doing anything as such, without introducing new norms, new structures, they were able to offer banking services to the rural, and within the first year, not only did they cover costs, but they were profitable, which is very rare for any bank in this world. I have not seen a case study like this, and they're still a successful story. Now this is something, and they need to come out with these innovative techniques without spending money or introducing newer systems or newer products. How do you actually read the rural masses? Without forcing even banks. If you can force certain banks, tag on a line that with 4 banks you open a 1 branch, yes, you would do it. They will show it on paper at times also.
Right.
But you will not be able to motivate them. You need to motivate them so that they get into the system. They see that it is actually going to be a profit venture for me. Then a restriction which makes me mandatory to do it, not because I want to do it.
When you understand the policy document, you have to realize that the Reserve Bank provides 2 functions, as a central bank and the monetary policy regulator.
Right.
So from their standpoint, there is huge corpus of saving, which puts a lot of pressure on the banking industry to have higher interest rates.
Right.
Which makes the economy uncompetitive. The second is that this money will never go into capital market as an alternate source and going straight into companies. So the incentive for spending is lesser than the incentive for saving.
Right.
And therefore 60% is financial inclusion, but only 3 or 4% through capital market route.
Right.
Rest is all banking. So bank has to find a more efficient way to provide money to the industry without going through this. And therefore this money will go more into fixed income products where our depth is very low.
Right.
Our long-term debt market is low. So this money can be used efficiently to go into mutual funds or insurance products, which then route themselves into fixed income, coupon fixed type of capital market products. And that regime is where we will head. We have gone through that equity thing, and we'll go into a bigger debt capital market development. And that's why this is all falling. I mean, you need to understand the full picture of why they are continuously talking of larger consolidation of banks, why they are talking about new banking licenses, they're talking about wholly owned subsidiaries of foreign banks, bringing all those things. I mean, Standard Chartered and Hong Kong banks, and these are very big operations in India, but they may also be under different regulators in how they participate, under mutual fund, under SEBI, and something under IRDA, and something under RBI. So everything will get into one consolidated position. So when an event of shock happens, you are able to measure how much of outflow or inflow will happen on the impact of the economy on monetary policy. But from a general perspective of participation in growth, you need to be more intelligent about how flows in the money, of the money in the economy which exists, can be done to provide better and efficient way of funding.
Right. Mr. Guhare, for a more inclusive kind of a banking, we also need to make use of the existing infrastructure.
Absolutely. Let me illustrate with an example. When the first tranche of money went out of poor villages, not so that poor villages of Jharkhand, Odisha and Bengal, the NBFCs picking up that money, which are essentially Ponzi schemes, Ponzi companies, picking up that money, could lure them by saying, if you park this money with us, there are multiple benefits, including a very high interest rates. That means the analysis which I read, a KPMG analysis, showed that they were able to convince people who have never gone to even a bank to at least engage with an NBFC, that means with a non-banking financial company they were doing. Indian private banks, if I pick up Professor Agarwal's brilliant idea from Cambodia, where if they can try and make a move like that, a country where the bulk of the population is in the rural market, this is a win-win situation, because you are not an NBFC, you are a proper bank, you have authorization from the Reserve Bank of India to pick up money from the markets and bring it back keep it as deposits and handle them. It's a perfectly
different-
perfect balance. So
there are many countries within India, right? I mean, South India, for instance, already has very successful experience of banking correspondents who are individuals carrying mobile ATMs, but disconnected online to your account. But South India is also a place where there are maybe 350, 400 banks which are treated almost as temples. People take their shoes out and then enter the bank branch. So for that mind, to tap on saving and just provide them the local level of what they think is the ring fence need is okay. But when you want to have an aspiration of becoming a superpower, you have to be intelligent in how you open up what you can do with that money.
Absolutely.
Otherwise, it's savings versus spending dichotomy,
It's like-
which will continuously plague growth.
Exactly. It's like putting strong collateral stuff on what you need. I mean, you just can't allow people to go into the market, pick up money and disappear. That means that money is lost, and the pressure is on the state governments to try and recover that money somehow. And even the chief ministers are saying that they could put some more tax. So that means the money been picked up by a company, lost, or maybe sent through Hawala somewhere. Other people have been forced to do. This is not a case like that. This is a perfectly legitimate operation. So if an example like that, which we just heard, can be replicated, realize the benefits of it. It's as simple as that.
Professor Agarwal, you wanted to come
just
in?
one more point. You know, apart from this rural and urban distinction of India, we have something called Agro India and non-Agro India. We have not focused so far, apart from NABARD, on agro banking. We have had in Europe, like in France, most of the banks in France actually started with agro. They have word agricole installed into their names as well in large number of cases. In other parts of Europe also we saw they were, Eastern Europe, large number of banks had agro base because they were agriculture based economics and they were agro banking. In India, RBI has still not focused. We did talk about in 97, 98 at the institute to create and finance these, and then fortunately they listened to us and created a Kisan credit card. But that is only empowering a small villager, a Kisan. But the agro banking should come up where they tie up with some of the providers of facilities, whether it is the plowing instruments or it is a question of manure, tie up with some of these big companies and provide them. That will not only raise demand consumerably because they will be sold, then they have this tie up, financing of that can be done, and they already know that this gentleman has a good history of financing and farm and so on and so forth, so there is no problem collaterals. And the farmer would be very happy if they are able to induce greenhouse farming. There are companies which do that, but agro banking is something which is majorly lacking. And if they are able to induce agro banking, I feel because of agro banking, they will be able to tap at least 50% of this 85% population which has never been tapped in banking atmosphere, because they would naturally see, I am getting my tractors, my this from this bank. So let me have open an account there also, which will be an add-on to that facility which they get. So all my transactions. So automatically he is facilitated and he would be very happy. The banker is coming to me. He is getting me a thing and he is financing it also. My productivity is increasing. And I think agro banking needs to be given due consideration, which RBI with Ministry of Finance and Ministry of Agriculture should look into, because we have 70% of population, not 68 today, 70%, because large number of people with the metro have moved back to do agriculture business in the rural areas again in the last 2-3 years. And I think we should tap this agro banking system also to enhance the efficiency and the impetus to the banking.
But at
in
the
rural
moment
segment.
we have every bank trying to do agriculture and international banking at the same time.
Which in some sense addresses what he's saying, but only half of it. You know, it is, Reserve Bank is very intelligent. They have a full understanding, and that's why priority sector agricultural component is split in direct financing or warehouse or drip irrigation. It's like segregated. It is intelligent, but it's not a businessman, right? I mean, you have to make a business out of it to bring more synergy.
Absolutely.
And that's why commercial incentivizing how it can pull more money attractively is what Professor Agarwal is saying.
Okay, so whether financial inclusion and profitability go hand in hand, we will discuss that. We'll also talk about the role of NBFCs here. We have to take a break in the program. Stay with us. We'll be back with the final segment of the show.
Leaders around the world.
I'm with a very special person.
Their policies.
We have the necessary infrastructure in place.
Their views.
India is a successful story. We need to give serious attention.
Latest issues. Questions that matter.
Trade between Commonwealth countries and all. There is no growth
as such.
Answers for the people.
ब्लॉक लेवल पर आम जनता से संपर्क करके small parties are coming up.
Broadening the conversation.
We don't have to destroy to the constitutional apparatus.
लोगों की अपेक्षाएं बहुत बढ़ गई.
In talks with Rajiv Mishra every Saturday 8 p.m. in special guest only on Lok Sabha Television.
ओफो, गैस खत्म हो गई।
इतनी जल्दी? सिलेंडर तोल कर तो लिया था ना?
हर बार लेती हूँ।
खाली सिलेंडर तोला था?
खाली सिलेंडर?
देखो, सभी सिलेंडरों पर गैस का वजन, खाली सिलेंडर का वजन और कुल वजन छपा होता है। यदि खाली सिलेंडर का वजन छपे हुए वजन से ज्यादा है तो इसका मतलब सिलेंडर में गैस के साथ पानी मिला हुआ है।
यानी गैस कम?
बिल्कुल, इसीलिए सिलेंडर लेते और देते समय अवश्य तोलना चाहिए।
सही वजन हमारा अधिकार।
जागो ग्राहक जागो।
Welcome back to Insight. We are talking about the present banking scenario in the country and how we can achieve the goal of financial inclusion. Mr. Guhar, I'd like your reactions on something we did not touch upon earlier, something which has invoked strong reactions, the idea of allowing corporates into the banking sector. How do you look at it?
Well, I look at it perfectly right. We have allowed corporates to get into almost any and every sector, aviation, telecom, wherever they have gone in. The good guys have sustained their business, the bad guys have moved on, including people like even Vijay Mallya, who came in with a lot of hope, and he said there will be an exclusive club in the mid-air and all of that. And it has boomeranged because the business practices were not rightly in place. Indian market was not ready to pay that much of a premium. Companies like Damania and all have all crash landed, East-West Airlines. Okay. Somewhere the corporate sector is much more prone to take risks, as unlike a government company, and the corporate sector knows its limitations also in working in a market like India. As a result, some non-banking financial companies have also applied for licensing because they have the previous wherewithal and expertise to get into this area.
And they have considerable
presence in the market already. So all the companies which have gone in, somewhere or other, they have a market dealing of cash, deposit taking schemes and all of that. They will only further consolidate it. As I said earlier in the program, two companies which eventually became very interestingly, they turned into banks, is Kotak Mahindra Finance and 20th Century Finance, that eventually became Centurion Bank and finally got amalgamated into HDFC. So, if handled well and controlled well and managed well, a good NBFC has all the potential to turn into a bank. NBFCs which do not have the power to pick up money from the market, as we had discussed earlier, they are the ones who are actually messing up the market because they violate RBI regulations. They pick up the market, and a gullible taxpayer eventually has to pay a certain amount of money from his salary to put it into the market and to save those companies. Now, I personally feel the role of the corporate sector in getting into the banking system is perfectly all right. The public sector bank need not feel threatened because they will still lead the market, but a whole new paradigm will open. I mean, Indian banking system, there will be multiple players, more opportunities and more facilities, and they will bring in a distinct management style, unlike the public sector banks which almost have a standalone same management practices. Here, you will have to cater to new markets, as we have discussed, and all those new markets you will have distinctive management styles practices, new set of human resources allocations will happen. So I see it as a very positive move.
Mr. Kaushal, how do you look at it, the idea of allowing corporates into banking?
Sometimes there's an unnecessary sense of notoriety which laces when you talk about corporates, because corporates are usually the bigger borrowers. But as long as you create an architecture,
yes, they are also borrowers.
Correct.
Except they expect the government, every time they expect the government to fund them, and that becomes a problem. The government money is my money.
And so that's why it's not fair to say that you shouldn't allow them. As long as the architecture of the regulatory regime prevents the conflict of interest situation effectively,
right,
it's all okay. I mean, you need money, who will understand Indian equity and Indian money and Indian economy and its potential better than the corporates who are already successfully doing business. So I'm not saying this as a banker. I'm just generally making a policy point here that there is no need to worry as long as you can create the architecture.
Okay.
I mean, all in the United States, GE created GE Capital. Of course, it's not a bank, but you know, there's a financing arm which went bigger than GE and became a global finance house. The Japan has Mitsubishi and Sumitomo and Mitsui and all these big names having their own banks in the starting point. But they are all independently regulated very strictly, and they may have a better sense of group companies and relationships. But that's a nomenclature thing, you know. I mean, I can be a good Indian bank and I can also have very good relationships, but I'll always stand in with clients I'm comfortable with. Including the corporates.
Right.
So there's conflict of interest is a separate management than corporates themselves participating in the banking license.
Okay, Professor Agarwal, in this case, has enough, ring fencing been done by the RBI, and how do you look at the global precedents here?
You see, as far as bill fencing you're talking about, it's a question of regulations. If they're able to observe those regulations well, then whether a bank is started by A, B or C doesn't make a difference. When we look at global scenarios, especially coming from Japan again, but more in Asia and less in Europe, we have seen corporates starting up banks, whether it is most of the corporations in Japan created that. And the reason was that they were the ones who were manufacturing goods and services, they were the ones who were getting that consumer money. Secondly, they were the ones who needed funds, and the government was not directly wanting to supply them with the funds. So they created those banks so they could get cheap funds at a more comfortable level, which was manageable. And that happens in most corporate-run banks. The important thing, as I've been talking about initially, is introducing efficiency and capturing that money which is not there in the banking system. You see, I remember about 20-25 years back, there was a zero error problem which came up, which is a very good case study in the banking system, wherein a computer operator who was creating a software could not know how to do something with a small decimal values which came up as a computational value to be done with. Only 2 decimals or 3 decimals could be gone. So whatever he did, he created a zero account with the balance amount going in, and within a month, millions of dollars were accumulated in that amount. So that was from 0 point values, millions of dollars were created in that account, which he actually tried to do away with. The second thing is temples worldwide, whether it is churches, mosques, temples, they are the richest institutions. A smallest man gives a donation of 1 rupee, 50 paisa, 25 paisa, 10 paisa, and with that 10 paisa donation, they are able to create huge corpuses which make them the richest institutions worldwide. And they should be motivated. There are some of these banks, some of these temples in India which are actually regulated through the government intervention, having people on the board regulating the funds which are collected. Why are they not allowed to create banks where there is a confidence of people in the rural segment in that particular association, that group, and there is an indirect control? They would not be corporate governance violences at all, because it is a society. There are people from all walks of society on that board, apart from that trust or the temple. Why don't they be welcomed? You see, most of the corporations which are wanting to move in already have experience in the financial sector. As rightly said, capital financing companies like Kotak Mahindra. Now even Tata has a capital finance, Amani has, Reliance has capital finance. So almost all of them have finance. Why are they not wanting to invite? They should invite even public sector, like HDFC was created into HDFC Bank created and then remerged. Why don't they invite the other Navaratnas to they have huge chunks of funds which are there lying locked up, which go to the government, locked up again in savings, which Bharat was talking about, that there's huge amount of banks keeping as savings, not going to the real economic growth. Why are they not allowed? And they should be invited to create. I think it is not only a question of corporates being invited. I think the government needs to identify which are the pockets which can bring in efficiency and the rural penetration without making much efforts with durability. A temple can never have an NPA. They will always, with that 10 paisa and the confidence which a common man, the smallest level man, a man sitting on the street has in that particular association, that particular group, no other organization can actually create that confidence. And I think government needs to look at, I think there are lots of Arthashastris and good prominent economists from all over the world working with the government. I fail to understand, they think they need to move around India. The government needs to organize a tour for them to go to large part of India and see what India is, then sitting in their air-conditioned offices and moving in cars between meetings.
All right, I've reached the end of the program, but I'd like your final comments, Mr. Guwahati.
I think the government made the right move. They should have made the move earlier. The last move they made was almost a decade ago, in 2004, if I'm not mistaken. Yes Bank was given a license. And as Aman has beautifully explained, probably maybe Mr. Chidambaram should actually try and take a look at what he's trying to say and explain that there are multiple institutions in this country which are ready to take forward this job, and they will, through their expertise of the market, will try and open up a complete new genre where people from the middle class, the rural belt and small and medium enterprises will enjoy working with. I am very confident of the corporate sector's entry into the private banking system.
Okay, Mr. Kaushal, we understand radical reforms are in the offing in the banking sector. How do you see the scenario ahead now?
I think it's part of a composite treatment of economic growth. I mean, we are going to catapult, our ambition is as an economy to catapult ourselves into another club, and therefore the needs are different, and the platform has to be created, which is a full financial service platform, and therefore more players and more consolidated, bigger muscle has to be created for this to absorb this kind of a growth. And that's the sense of direction. So the Reserve Bank has a lot of responsibility, but at the same time there is also convergence required in how various financial sector regulators, including insurance regulators and capital market regulators, will find efficiency at their end in being able to dovetail these various growth pockets.
Right. Professor Agarwal, a quick word.
I think there is a political, social and economic logic behind going forward, and I think it's never too late to begin and move forward. It's the only thing is that how well are we able to take everyone with us and induce growth not only in the economy in a macro structure, but also induce growth which is felt by a common man, that and makes him feel that I am part of this Indian economy, and makes him feel proud that I belong to this desh or nation called Hindustan or Bharat.
Well, on that note, it's time for me to wrap up the discussion here. I'd like to thank all my guests for coming to the studios. It was a pleasure having you all here. Professor Aman Agarwal, Bharat Kaushal and Shantanu Guhare. That's it for now in this edition of Insight. Thanks for watching. Goodbye.
Are men from Mars?
And women from Venus?
Who is the better half?
Who takes the decisions?
Who is responsible?
Who is demanding?
Who is submissive?
Who is independent?
Can men and women ever find common ground? To find out, watch Gender Discourse. Every Thursday, 4 p.m. only on Lok Sabha Television.
इस भागती दौड़ती दुनिया में लगता है जैसे परेशानियां आपको ढूंढकर निशाना बना ही लेती हैं, जिसमें एक आम आदमी टूट कर रह जाता है।
मैंने बैंक से लोन लिया था और बैंक वाले अब मुझको चीट कर रहे हैं।
मेरा टेलीविजन अभी वारंटी पीरियड में है, लेकिन कंपनी वाले इसे ठीक करने से मना कर रहे हैं।
आरटीआई के तहत इनकम टैक्स डिपार्टमेंट से कुछ इन्फॉर्मेशन मांगी थी, जो मुझे अभी तक नहीं मिली है।
पुलिस एफआईआर दर्ज नहीं कर रही है।
मेरे पास आजकल बहुत ज्यादा ही वर्गर मैसेजेस और कॉल्स आ रहे हैं अननोन नंबर से। मुझे क्या करना चाहिए?
डॉक्टर ने गलत ट्रीटमेंट कर दिया, जिसकी वजह से मेरा तबियत बहुत बिगड़ गया।
प्रॉपर्टी में मेरा भाई हिस्सा नहीं दे रहा है।
ऑफिस में कई बार ई टीजिंग जैसी प्रॉब्लम्स को हमें फेस करना पड़ता है।
शेयर मार्केट में मैंने